Yo, what is going on, guys? What is going on? All right, let me just make the announcement in the Discord. Hit that like button so that more people find the stream. It's hilarious because this press briefing says Press Secretary Karen, is it Karen or Karine? Karen Jean-Pierre featuring BTS. BTS is going to be at this press briefing. This is going to be hilarious. Like, it'll be so funny if they don't even touch on the topic of inflation. But, you know, even if they don't, we'll get into the topic in a more serious manner. There's definitely a lot of things to discuss. The fact that, you know, Biden and the White House right now, they are really, I should say, pressured to do something about what Americans are feeling at the cash register and at the pumps, right? However, I don't think that there is any clear indication that you know, the White House can actually do anything. Historically, the reason that the White House and the Fed are separated is because, you know, presidents, especially during election years, presidents and politicians, they shouldn't have the ability to influence the Fed in order to change monetary policy that would be more favorable to them, right? So that is why historically, you know, presidents don't particularly try and influence the Fed. Now, obviously, it does happen. I mean, you'll remember during the Obama years, you know, they didn't really, they kept rates really low until I think it was like 2015, 2016 when Janet Yellen started raising rates. And then even during Trump's year, Trump said that Jerome Powell, I think he called him like the most dangerous man in America or something like that. But he basically tried to threaten Jerome Powell to going to negative rates. If you guys even remember that, he not only did Trump want zero rates, he wanted negative rates, and that was before COVID, right? So historically, there has obviously been some mingling between, or tampering, I guess, between presidents and the Fed. But in general, the Fed is supposed to be an independent party because since they do control really the most powerful tool that this country has, which is the money supply, politicians and presidents can easily abuse that if they have direct connection to the Fed, right? So, all right, they did not start. As of late, the White House has actually been pretty late on their press briefing. So when this kicks off, we'll jump right to it. But you know, in terms of what the president can do, I mean, his approval rating is really low, right? Obviously, Americans are feeling pain at the cash register. Americans are feeling pain at the pump. And the plan that they outlined, at least the one that they released to the public, it just seems like it's something that was fed to the media just to say that they fed something to the media. But if you look inside the plan, it doesn't really have anything tangible that would stop inflation in the short term. You know, they're talking about clean energy credits and whatnot, but these are all things that really have a long-term horizon and aren't going to do much to bring down the price of oil, which is something that is used today. So, you know, besides the Fed ripping the Band-Aid off, in which case it will likely cause a recession, and that may be what's needed, right? In order for us to tamp down prices, that may be what's needed. But aside from that, I don't think there's anything that the White House can do, because it would have to be passed through Congress too. So that's a long process in and of itself. Is that whatever legislation the White House wants to do has to be passed through Congress. So, you know, I don't think there's really, they're scrambling right now, right? But I don't think there's anything that the White House can do except for try to pressure Powell into doing something that, you know, they think will bring inflation down, right? G Nick says Z baby. Z sounds different. You know what? Oscar, It's so funny that you say that. So I didn't want to say it, but I've been battling like strep throat the last 4 days. So I haven't really been talking much, and I haven't been, doing videos, obviously. So this is really the first video I've done since I've had strep throat. So yeah, it feels like I have a tennis ball in the right side of my throat. So if I sound different, I'm sorry. But yeah, I wanted to stream this for y'all. But hey, good catch. Good catch, honestly. Hello from Pico Rivera. What's up, Mr. J? Suresh, Ed, Zameen, James. What's going on, guys? Yo, Kiran, what's going on, bro? Hey, text me back, dude. Follow up on what I asked you. All right, let's see. Hey, thanks, Shafiq. Thank you so much, man. Thank you, Sonar. Salty Sailor, drink that honey, brother. Yes, thank you. Let's see what. Oh yes, the sign language superstar is back. I honestly don't know. Like, this just seems like. I don't know. It seems like something out of another dimension. Like Jerome Powell, Joe Biden, and BTS all in the same room. And then it says here that the press briefing is going to be featuring BTS. I don't know if they're just going to be standing next to Karen or if they're going to be performing. I don't know. We'll see. Lucas says gonna be a dance off with who? Between Biden and BTS. Have any of you ever heard a BTS song? Be honest. Like, I know how they look, but have you ever heard a BTS song? While we're at it, let's see how the market's reacting in real time. Maybe we can do this. Make this smaller. There we go. We'll put this on the side. Don't want to obstruct sign language lady. What is Salty Sailor says, what is BTS? BTS is a Korean boy band, I believe. So I'm not sure what. I'm not sure. There they are. Fuck. They came to the White House dressed like the Men in Black. Shit. I guarantee you her mic is off. Yo, the sound is off. I don't think they realize yet that their mic is off. What the fuck? Let me check real quick.
Yeah. This is the gateway drug. It is.
Yeah.
I mean, this is it. So
their mic is off. My sound is working.
To combat racism, xenophobia, and intolerance facing ANHPI communities.
Wait, what happened
Beginning
to
his first week in office when he issued a...
What happened to Jen Psaki? I think she got a job at CNBC, MSNBC, right?
Also signed
Okay, so this is the new press
COVID-19
secretary.
Hate Crimes Act into law, signed an executive order to reestablish the White House Initiative on Asian Americans, Native Hawaiians, and Pacific Islanders, and funded critical research to prevent and address.
Okay. This has nothing to do. Okay, let me see if I can find something. In the meantime, I promise I will give you my update on the markets. I'll give you my update on what I think is going to happen. And we'll talk about day trading and whatever else you guys want. This has nothing to do. Fucking BTS. All right, let's see if I can find. Is there anything on the newswire that discusses what Powell and Biden spoke about? No, there's nothing on the newswire. Nothing. So hopefully they talk about it. I'm definitely not going to stream. Can these people? I want to
네,
know how they sound.
최근 아시아계를 대상으로 한 많은 증오 범죄에 굉장히 놀랐고 또 마음이 안 좋아.
All right. Sign language lady definitely can't speak Korean because she's not signing at all while they're talking. All right. So we'll come back to this if they start talking about inflation. But at the moment, let's go over what I think will happen. So what I find interesting is, if you remember, the markets rallied last week, and they rallied for a couple of reasons. They rallied because obviously Memorial Day, we normally tend to see a boost in the market, the week before Memorial Day, right? But also it looked like the Fed members and even the hawkish ones like Bullard were sort of projecting that, hey, we may revisit our monetary tightening in September, meaning that, we're going to raise rates we raise rates in May, we're going to raise rates in June and July and August, and then September is when we might then revisit and say, hey, do we need more rate hikes or can we stop here? So obviously the market likes any time that the Fed gets easier on monetary policy. However, if you look here today, this has changed. So it's now more than 50% of speculators think that the Fed is going to do, more rate hikes in September. And same thing in November. More than 50% think that the rate hikes will continue in November. More than 50% think that the rate hikes will continue in December. This was not the case last week. So that is why you are seeing, and I got to get to Amazon in a second. Amazon's up 19% in the last 5 trading days, right? As I told you in the previous video, it doesn't matter if you think that the market's going to go down some more. If you got a chance to buy Amazon at 45% off and you like the fundamentals of the company, you probably should take that deal regardless of what's going to happen in the long term, right? Amazon is up 18% in the last 5 trading days. But because of the fact that now investors think that the rate hikes will not stop in September and beyond, you are now seeing sell-off in the bond market, which obviously raises the yields, right? And if you want a quick explanation of the relationship between bonds and yields, follow me on Instagram. I released an Instagram reel today, less than 60 seconds, going over the relationship between bonds and yields. And I release reels, market-related reels, every single day. And in the stories, I go over day trades as well. So follow me on Instagram. You'll see the link in the description below. But because of that, you see yields are up on the 10-year 3.61% today. So it is because of that uncertainty with the rate hikes in September and beyond, right? Let me get to your question. Actually, you know what? Let me see what's happening here. Maybe when BTS leaves, they'll get into the serious topics. Let's see.
Right. Thank you, guys. Thank you. All right. Okay.
All right, let's see.
Brian, I don't know how you're gonna. Okay. I don't know. I'm excited to hear what Brian has to say. Okay. Next up, we have Brian Deese, our Director of National Economic Council, who just came out of the meeting with the President and the Fed Chair and Secretary Yellen. And so he is joining us today. So thank you, Brian, for making the time.
Thank you. Okay. So I get to go home and tell my kids that BTS opened for me. I did not expect that when I woke up this morning.
I guarantee you his kids don't know who BTS is.
And I know that you're all here to talk about trimmed mean inflation, and you're as excited about that as you are for them. So thank you for hanging in here. I just wanted to provide a little bit of context to the economic focus of the day. As you all know, the President just concluded a meeting with Chair Powell, along with Secretary Yellen and myself. It was a very constructive meeting focused on the outlook for the U.S. and the global economy. And I won't go into detail of the private meeting other than to reinforce that the President underscored to Chair Powell in the meeting what he has underscored consistently, including today, that he respects the independence of the Federal Reserve and will provide the Federal Reserve the space and the independence that it needs to tackle inflation. Also today, the President published a op-ed in the Wall Street Journal, and I will just give you a little bit of context for that piece and how we are thinking about economic priorities here. So 4 quick points. The first point is there is no question that the global economy right now faces a range of significant challenges. Inflation is first among them. It is a global challenge. We learned, for example, today that inflation in the euro area hit an annual rate of 8.1%. And it is a challenge that the President understands is hitting American families and creating anxiety and also economic hardship. As he said, he gets this. The second point is that as the President is making fighting inflation his top economic priority, it is really important that we recognize that we can take on inflation from a position of relative economic strength. That is true if we look in the global context. Few countries are better positioned than the United States to make this transition and navigate this transition that the President talked about today from historically strong recovery to more stable, resilient growth. If you look, the reason why we have those economic strengths is the strength of our recovery, the historic.
Markets look like they're crashing. I don't know if it's because of BTS, but markets look like they're coming off their highs.
Labor them, but suffice it to say, we have the strongest labor market in modern history, which is not only creating job opportunities to move into new careers with better pay for millions of Americans, but it is also pulling more people into the labor force. And in fact, we've seen the most rapid labor force participation rebound among prime age workers of any of the last 4 recoveries. And we're also seeing that in terms of the strength of household balance sheets as well. Savings is up, debt is down, bankruptcy filings remain near pre-pandemic lows. Eviction filings are 30% below their pre-pandemic levels. All of these are sources of economic strength from which we can now focus on bringing prices down. The third point, this was an important piece of this, which is that the President's talking about this transition and growth. As we move through this transition, our economic growth should look different than it has in the historic recovery phase. We've run this first leg of the race at a very rapid clip. That has put us in this strong position relative to our peers. But this is a marathon, and we have to move and shift to stable, resilient growth. And that's why the president's outlining the plan that he wrote about today, which is something that he has been focused on here for some time now. Core to that are the three elements that he flagged. The first is nominating quality people to the Federal Reserve. He has done that. He got an opportunity to speak with Chair Powell today. Strong, incredibly credentialed bipartisan group. And we are hopeful that the Senate will move to confirm the last of his nominees, Michael Barr, without delay, and giving the Fed the independence to operate, which is critically important, particularly at a moment where inflation is elevated, but cannot be taken for granted, which is why the president is reinforcing it publicly today. Second is lowering costs. How can we make things more affordable for typical families during this transition period? And the third is lowering the federal deficit, which will help to ease price pressures in the economy. That is, on those second and third, that is the focus, the president's economic focus, the focus of our economic team. Many things, many of the steps therein are things that we can do on our own with executive action. There are also places where we need Congress's help and to work with Congress. But that is our overarching focus when it comes to the economy right now. So that is the context I want to provide. Happy to do whatever Karine tells me to do.
Brian, one trade-off to fighting inflation may be in
He literally said nothing. Like, honestly.
employment, which the White House sees acceptable in order to obtain lower inflation.
Well, I think that one of the things about this transition, and we are in this transition, one of the things about having the strength of the labor market recovery that we have had to date.
Guys, hit that thumbs up. Do me a favor, if you're on the stream right now and you haven't hit the thumbs up, hit that thumbs up so that more people find the stream. Appreciate you.
Gains or gains more consistent with periods where we have had this level of unemployment in the past. And we can actually take on inflation without having to sacrifice all of those gains. And so you see that, for example, in the high rate of available jobs per worker. That can, and you've seen that start to moderate somewhat. So one of the ways that, for example, businesses can reduce their demand, if that is necessary, is to bring down the number of open jobs they have available. But that is, I think that the bottom line is we have a very strong labor market, and that is not only a source of strength for millions of people who are getting jobs or getting jobs at higher wages. It has helped to strengthen household and.
Guys, think of questions that you guys want me to answer or analysis you want me to go over. Because when this clown is done talking, I'll get to your questions.
Is because of the strength of the labor market. So that positions us relatively well going into this period of transition.
Just one follow-up. The president emphasized, and you just emphasized, his respect for the Fed's independence. Is he happy with what the Fed is doing?
Consistent with respecting their independence is respecting their independence. So what I would say is that he has confidence in the people that he has nominated. He is grateful to the Senate to confirming 4 of his 5 nominees, and he is focused on actually giving them the space to make those independent judgments. It certainly is the case that the president has identified inflation as his top economic priority, and he agrees with the assessment that the team at the Federal Reserve is making, and that Chair Powell is making as well. But part of providing that independence is to stay out of the business of commenting on tactics, timing, or otherwise on the monetary policy side. So you can expect that from us going forward.
Okay. A follow on that. If he's confident in the team that he's put there, is he confident that they will be able to deal with this enormous challenge, which is taming inflation and not putting the economy into a recession?
Well, I think that what the president is and what we are very confident in is that we can approach this challenge and we can focus our efforts on bringing inflation down without having to sacrifice all of the economic gains that we've made because of the unique position of strength that we are in, because of the progress that we have made over the course of the last 15 months. We are now uniquely well positioned to do that.
Does the president think that the Fed needs to revise or review its modeling and forecasting techniques, given they pretty badly misjudged that inflation was not actually transitory?
Yo, she's asking a boss level question.
Category of things that we will leave to the independent judgment of the Fed.
Phil in the back and then Kelly in the left.
Thank you, sir. You noted that inflation remains the president's top priority. I'm wondering a little bit about the intersection of that priority and the president's plan to forgive as much as $10,000 in student debt relief for families making as much as $300,000. Some analysis says that this would cost taxpayers as much as $250 billion, and of course that money's not going to be dumped into the economy all at once. But I'm curious how you see this affecting consumer spending, because presumably some of these folks, rather than servicing their loans, might go buy a new phone or decide to buy that car or go on the vacation. So are you confident that that student debt relief program would not have a negative impact on inflation?
Yes, I'd say a couple of things of that. The first is that notwithstanding some of the reporting, the president hasn't made any decision on that policy, and so I won't get ahead of any decision or any particular program or plan that has been speculated about. Broadly speaking, if you look at those who hold student debt, principally people who went to public colleges, principally people who, when they were going to college, had 2/3 of which their family income was less than $50,000 per year, and many of whom are struggling.
I don't know about you guys, but I don't know if I want to listen to the whole thing. If you guys want to, let me know. I'll keep it on. But honestly, he's not saying much of anything, and it sounds like he doesn't even know what the hell was discussed between Biden and Jerome. He basically just mentioned in passing the inflation numbers coming out of Europe, which this morning they were released. They look horrendous. Not surprising. It's the highest inflation in Europe in decades. And in terms of a plan in order to defeat inflation, he said, number one is hiring competent Fed members. I mean, that's not really a plan to defeat inflation, and the Fed members are already in place. 2, lowering costs. 3, lowering the deficit. But there's no real plans on any of those. However, there was a very significant question about lowering student debt, or I guess forgiving student debt. That is a very significant question at this time, because yes, if all of that money hits the market, so imagine that everybody gets $10,000. Everyone who has student loans gets $10,000 of their student loans forgiven, and now they have more money to spend on other things. That is not going to help with inflation. So although I might agree, because I do think that college in this country is a scam, although I might agree that people should have their student loans forgiven, I don't know that this is the right time to do it. If you're trying to fight inflation, the worst thing to do is give people hundreds of billions of dollars when you're trying to lower prices. If now hundreds of billions of dollars are released into the economy and people don't have to pay their student loans, but now they can, buy iPhones and cars and MacBooks and stuff, that's not going to help with price stability. So although I agree with the concept of relieving student loans and really fucking up the student loan companies that have been gouging students for decades, I don't know that this is the right time to do it. I think that we might have to revisit this after inflation has been tamped down. Let me know what you guys think. But yeah, if you guys want me to go back to this, let me know. I don't really have interest in going back to this. So you could see how the market is reacting to this because of the fact that he didn't say anything significant, because of the fact that there wasn't much to offer. We had the European numbers released this morning, the European inflation numbers released this morning, and then this clown comes in and is basically offering nothing. And then I showed you guys what the what the expectation now is of the Fed funds rate is that, instead of stopping raising rates in September and beyond, the market is now seeing more than a 50% chance in September and beyond of actually continually raising rates. So, we'll see. Remember, the CPI numbers come out June 10th. That's going to be extremely important. If the CPI ticks back higher, which is a huge possibility, especially since if you look at oil prices, right? Let's look at crude oil futures real quick. And again, apologies if I'm not speaking clearly. But yeah, I haven't really done videos in the last 4 days because I'm battling this thing. So if I'm not speaking clearly, I apologize. But if you look at oil prices and we look at week to week, in May, oil prices actually started ticking higher. So the CPI numbers that are released in June are going to reflect May pricing. And if you look at May, oil prices have gone up 10% in May. So the previous CPI numbers, reflected a stagnation in oil prices, but now oil prices are up 10% in May. So in June, if the price of everything else is higher, there could be a chance that CPI ticks back higher. So we don't see a continuously declining CPI, but CPI went from 8.5 to I think 8.2. Now, if it goes to 8.5 or above, I mean, you can expect, honestly, the market, June 10th, if that happens, I think you can expect the market to take another dive. And we could break this 3,800 level that we've held up basically since the beginning of May. So a lot of moving pieces here. But the main crux of the issue, the main crux of the market right now is price instability. That is it. If it looks like the Fed can solve that, that will give runway to the market to rally again. And I think who will lead the rally is mega cap tech, because mega cap tech are really the only companies that can justify their valuations based on their earnings. And even those finally suffered a bear market. They were the last domino to fall or the last shoe to drop, right? So basically, if the Fed can show that, they are actually on track to lowering inflation, I think that mega cap tech will lead the way in terms of the rally. So, all right, let's see. Don't regulate tuition. Have those schools. Blah, blah, blah. Okay, whatever. Guys, Powell just came over to chill. I don't know. All right, put the clown back on. You guys want me to put that guy back on? Okay. You're good, bro. Feel better soon. Thanks. Drink some tea. Yes, I've been drinking tons of tea. You might have hit by the wind. Yeah, man. It's the draft. Bro. Should I buy more DraftKings? Yeah, you should actually go 100% DraftKings. Sun's out, guns out. You know what? I have a fever, so I'm like really hot. I was gonna do the live stream with no clothes on, so you're lucky I even put this t-shirt on. I'm just messing with you. All right, let's see. Anything you guys want me to go over? I mean, that's really the state of the market. I think June 10th. I think we trade in this, here, this level here on let me go back to the S&P 500. Sorry. This level here on the S&P 500, and a lot of mega cap tech stocks are following this trend, by the way. But this is where support is now becoming resistance. So this is called a support resistance flip, but we've held the support since April 2021. And in May, we finally broke down, and now it is support. So this is a bearish, this is not a bullish position to be in. This is a bearish position to be in. And I can see us really trading in this choppy range here until June 10th rolls around. And then when the CPI numbers are released, and I just showed you the price of oil, if the price of oil is, reflects what's going to happen to inflation, it's very, very possible that we get a higher reading than we did last month, which is going the entirely opposite way. And if that's the case, then I guarantee you all hell will break loose, and we might we might, it's plausible, probably likely, break this 3,800 level on the S&P 500. Now, in terms of where we will get to, I mean, you can use something like a fib retracement to get there. So if we take the bottom of the COVID 2020 crash and we take the top that we saw earlier in December 2021, if we break that 3,800 mark, the next level down is 35, and then we have the golden pocket between 31 and 3,200 on the S&P 500. That is not unrealistic if the CPI numbers come out and we are trending in the opposite direction than we want to, right? Yeah, the markets are taking this real bad. Let me see actually if there was any good day trading opportunities here. Not really so much. I mean, the triple Qs have been bouncing in this level all day. Yeah, so we'll see. I think that that the markets are really anticipating that CPI number. Let's see. Is DraftKings a buy at $1 or $1? Yeah, I'll buy DraftKings. What's up, Z? Hope you get well soon. Thanks, Bruno. Thank you, man. Do you have COVID? No, I don't. I don't have COVID. I have strep throat. Hey, Doc, what's going on, man? How's Dubai? It's probably getting super hot right now. 80-20 portfolio, DraftKings and Penn. Alia says, don't go. Don't go where? Don't go where? I'm right here. Azim, coin, short the rips. Yeah, honestly, we've been really just waking up neutral and playing the levels that that we see on the day trade watch list. Although there haven't been many opportunities today because the market hasn't really broken out in either direction. It's just been trading in this tight range. But every day, really, for this whole year, we haven't been swing trading much. Every once in a blue moon, we'll do like an earnings play, but not really anything too crazy. Too much juice. Are you from Portland? I lived in Portland, not from Portland, no. Z, let me just say the whole wake up neutral changed my life. I love you. Yes, man. Siddharth, thank you so much for your donation to St. Jude's. Bruno, I appreciate you, man. Like you're one of the many whose progress I've been tracking on the Discord. And yeah, man, I love seeing that. Could you give a brief explanation of the option watch list? Yes, I will give you a brief explanation. Yash says, what up, Z? What's going on, Yash? I had a friend named Yash a long time ago. I don't think you're him. Do you live in the Valley? Can you do live trading session one day? Yeah, but probably just for the Discord. Not for YouTube. If it's for the Discord, then I won't mind like the long moments of silence, because a lot of day trading it's like hunting, right? You're just sitting there waiting, and I like to try to keep these live streams educational and entertaining. And so if I do one that's like YouTube wide, I wouldn't want people who aren't familiar with the channel to stumble across a live stream and be like, what the fuck is this? So I don't mind doing it for the Discord, because you guys know how the flow goes, right? So Bruno Valente, thank you so much, man. Thank you for the donation to St. Jude's, bro. Appreciate you, man. Appreciate you. How much is the Discord? Check the link in the description. By the way, well, I shouldn't say that. Just check the link in the description. All right, so the options day trade watch list is pretty simple. I've done videos on this too. Oh, fuck. I'm going to have to hop off this live stream soon. I'm sorry, guys. But so if you, the red side are puts, the green side are calls, right? So we basically wake up and draw these levels, including pre-market and after hours. And if the levels are breached to the downside, aka the red marker here, right? Then we buy these puts, right? So this says buy the 407 puts if we are below 410.25. buy the 420 call if we're above 418. That's exactly it, right? So you would essentially open up your charting platform, and this right here, this template, if you want this template, you can either get it from the Discord, or you can, is there a link in the description to get the template? I don't know. But if you don't have it and you're not part of the Discord, I don't know why you wouldn't be. Just send an email to info@thetravelingtrader.com and ask for the template. But yeah, you would open up your charting platform and wait for those levels to be breached before buying the appropriate calls or the appropriate puts. That's exactly how it is. So every day we come up with this list. And it differs. I mean, the SPY and the triple Qs are on there almost every day because they're the most liquid, some of the most liquid options, and they're index options, right? And then on a day-to-day basis, depending on how the charts look, we might have Tesla in there, we might have Facebook in there, we might have Apple or Microsoft or Nvidia, but they're all really, really liquid names. So, yeah. All right. Hopefully that answered your question. New to the channel. When should you cut your loss from a false breakout? This is something that will require you to learn how to chart, because if you're just going by percentages, right? If you're just going by percentage loss, like if you bought an option and it is now down like 20 or 30%, and you're like, oh, at what point should I exit? It's not going to be based on the amount that you are down. It's going to be based on whether the setup is still valid or not. So if you don't know how to read a chart, then I would start there, right? I would start getting comfortable with reading a chart, because you're not going to be basing it off of the percentage that you're down. Options prices, especially short-term options, especially if you're dealing with 0 DTEs, right, which is 0 days to expiration, or options that expire that week, those can swing wildly. And you don't want to price yourself out if the setup is still valid. So let's just say that you bought a, hold on. Let's just say that you bought a call. Let's say that that you bought a call right here, right? Just for shits and giggles. And the price kept fluctuating. The call is now down 20% because, the stock isn't moving up. Well, if you had a level, say that this was your support level, it doesn't matter how much you're down on the option. If your technicals haven't been broken, then you remain in the play until the trend is no longer valid. And this is why it's super important to position, to manage your position before you enter the trade, not after. So the number of contracts you buy, it has to reflect what you're comfortable losing, right? Because there will day trading, you're not going to avoid it. Day trading options, you will not avoid it. You will not avoid being down heavily on a position while the trend's still remaining valid. So if you oversize and now your oversized position is down 30%, you're going to panic, right? Imagine you're down thousands of dollars because you try to hit a home run. Now that position is down 30%. You're not going to be able to see clearly and say, fuck, are we still good here, right? You're going to exit just based off of the amount that you're down. You're not going to exit based off of what's going on with the technicals. So that is why it's imperative, one, to learn how to read a chart. And if the technical pattern is still valid, you stay in that trade. And two, you manage your position before you enter the trade. You don't oversize and then try to clean it up later. So hopefully that makes sense. Would you please have a session to teach charting? Sure. I mean, we do a Zoom call. If you're part of the Diamond Traders Pro, we do a Zoom call every month. So yeah, we do go over that. Are you aware that there is a global food crisis coming? I mean, depending on what products you're talking about, there's already shortages, right? So yeah, You know that the military does DraftKings too. I don't know what that means. Aside from the Discord and the Tube, can you create technical analysis course? Maybe. Thank you, Z, for your support and staying with us. Appreciate you. Take care. Get well. Benny Lean, all-in-one extra strength night syrup works wonders. What the fuck is that? Is that some shit that they drink in like Houston? Like at parties and shit? Like lean? Like promethazine? What is Benny Lean? Is that the shit that you mix with Sprite? Double cup mixed with the Sprite? I've never heard of that. All right. The White House press conference regarding Powell-Biden meeting was a big pile other than Biden. Oh, is that still on? I totally forgot about that. Let's see. Where the fuck was that? This fool's still talking. Okay. Oh, she's talking. Karine. Let's see what Karine's
We're
saying.
seeing across the country, and we have to do something, and we have to continue to make efforts to act, to protect our kids, to protect people going to the grocery store. The president has made this.
Yeah, they're not talking about monetary policy, and so yeah. One other thing that I wanted to bring up before I potentially end the live stream. One other thing I wanted to bring up is I don't think people are paying enough attention to the Treasury market. So I sent out a tweet yesterday. Right here. I said, not enough investors are paying attention to the bond market. The Fed has never had a balance sheet as large as $9 trillion. And selling these assets could flood the market without a rising demand in treasuries. Another crash in bonds could mean more pain for stocks. So the Fed is going to start selling assets off of their balance sheet. They're still pretty vague on the rate at which they will do this. But if a bunch of treasuries start hitting the market, and there's no demand for those treasuries, then the yields are going to spike and the bond market is going to crash. Because remember, there's an inverse relationship between bond prices and bond yields. So aside from the CPI numbers on June 10th, this is definitely another thing to watch, is the Treasury's continued monetary policy regarding the bonds on their balance sheet, right? So, yeah, we'll see. We'll see. Looks like the market is just kind of jumping around in range. NASDAQ slightly in the green. I mean, we started the day pretty flat, and then we went not really red, but we went red after the White House remarks, and then now we're back flat. So we'll see. It's going to be choppy like this, I think, until the next CPI numbers. Do you take the Greeks into account on your options trades? What are you, crazy? Of course. What else are they there for? Of course, dude. You got to take the Greeks, especially if you're trading singles, right? Like if you're just buying calls or buying puts, you got to take the Greeks into account. Now, if you're talking about day trades, the only Greeks I really look at for day trades, the only Greek I look at is Delta, and I look at volume, right? But if you're talking about multi-day trades, like holding something longer than a day, yes, of course I look at Greeks, because options by nature are time decaying instruments. So yeah, QT starts tomorrow. No, QT already started. What starts tomorrow is the letting the balance sheet run off, right? QT is a combination of two main things: rising the federal interest rate and selling assets off of the balance sheet, or letting assets run off of the balance sheet, right? So what starts tomorrow is assets dropping off of the balance sheet. But QT already started when the first time that they started raising rates, right? Can you do an option play for us for Tesla? Why Tesla specifically? Love your work. Cheers, bud. Thanks, Troy. DJ Mbenga's half eating taco. Hey, I remember Mbenga played for the Lakers. Oh, Benadryl. Yeah, I don't know. You said something hella weird. I didn't know what medicine you were talking about. I thought you were talking about like lean, like that. You know, that shit that they mix with Sprite in Houston. It's like promethazine, Sprite, and a Jolly Rancher or something like that. And then you put it in double styrofoam cups and you drink it like it's whiskey. Can we have a video on selling future options? Selling future options? Do you mean futures or options? I don't trade future options. It's either futures or options. If the CPI numbers come out hot on June 10th, do you think it's time to get out of the SoFi Palantir till rate? I don't know what your cost basis is. It really depends. But yeah, I mean, it really depends, right? Like, but if you bought those stocks really high and they're already in the single digits, you probably have more to gain in the long run by holding them than to lose, right? But if they're most of your portfolio, then I would start rebalancing stuff around, right? Christopher Ramos, you know your drinks. No, man, I just know hip hop culture. I barely drink, dude. I barely drink. Thank you, Z, for everything. Hope you feel better soon. Thank you. Go rest, bro. Thank you. Astro Geek. Swoosh. Do you use Heiken Ashi for day trading? Yes. This is what you see right here. Whoops. I use Heiken Ashi on the 5-minute because it allows me to not get faked out as much by long wicks because it's more smoothed, right? So, yeah, definitely. When are CRM earnings, Mike? I don't know. Short TLT. I mean, the time to go short TLT was before they started raising rates, not now. You know, you want to start probably adding TLT if you're looking for bond exposure in your portfolio for the long term. You know, if you're going to retire in the next 1 to 2 years, probably don't even want to hold bonds at all. But if you have 20, 30 years until your retirement, yeah. All right. Bad idea to buy weekly option at close. I don't know. That's too vague of a question. Too much juice. I don't know what you mean. Bad idea to buy weekly option. I mean, be more specific. Awesome options course, Z and Go Madrid. Okay. Manny. Awesome options course. Thank you. I agree with you. Took me a lot of hours to put it together. Go Madrid. No. But it's okay. We can disagree on football. That's fine. I'm probably your worst nightmare. I'm a Barcelona fan. So, for day trading, before you take the trade, do you have a minimum for theta versus delta? Day trading, you're not looking at theta because theta means how much value the option loses every day. And if you're in and out the same day, then theta is not relevant to you. So no, that doesn't make sense. Delta, yes, I look at delta, but the first thing I look at is volume and then delta. Boston or Golden State? I mean, I live in California and I can't stand the Celtics. So we'll see. And I love Steph. I think Steph is the best point guard who ever played the game. And I don't care what anybody tells me, you know, fucking you could throw anyone in there. John Stockton, Steve Nash, who I love, Magic Johnson. Steph is the greatest point guard I've ever seen in my life. So, yeah, I'm not a Warriors fan, but I love Steph. And there's no way I don't want Boston to get a ring. So, Golden State. We're in Cali, L.A. Joel said, I knew there was something wrong with you. When you traveling down under? Not sure. We'll see. Are you guys open yet? I don't know. Are you guys open for travel? Let's see. Wow, not Kyrie, the slander. I think Kyrie's dope, but do I think he's the best ever? No. Barcelona, go Atletico. Saying you hate the Celtics just made me the biggest fan of your channel. Well, unfortunately, these alliances create divisions. So I probably, half of the people feel the way you feel, and the other half say, oh, now I hate your channel. But hey, we could put our sports differences aside, right? This channel is all about the market. So CRM earnings are today. Are you serious? Let's see. Whoa, what the fuck just happened? Okay. Why is my keyboard changing languages? Let's look. CRM earnings. They are today. Wow. The problem with CRM is that CRM, usually the volume is very mixed, right? So it really depends on the bid-ask spread. This earnings, because these earnings are so volatile and a lot of traders are looking to trade them, these earnings for CRM actually have more volume than usual. So the bid-ask spread is not great, but it's not terrible. What are they? Let's see. Let me see if I can pull up market. CRM. Let's see what CRM typically does. And this tool I'm using, by the way, is called Market Chameleon. If you want access to it, check the link in the description. But it shows you all the previous earnings and whether CRM normally goes beyond the expected move or not. And then it shows you what the implied volatility crushes usually after earnings, right? So let's see. So it looks like most of the time, besides this time in 2020, most of the time CRM stays within the expected move, right? So if implied volatility is high, you can look at selling like an iron condor. And an iron condor, basically, you're creating a range, right? And if the stock falls anywhere in that range, then you get paid 100%. So in this case, if the expected move on CRM is, let's see what it is. It's plus minus 8.4%, right? So in this case, let's just call it $14. That's the expected move on CRM, plus minus $14, right? So if you wanted to construct, say, a neutral strategy like an iron condor, let's see how much you get paid for that. Okay. It's trading at 162 now, so let's go out to 175. Let's sell that. Let's buy the 180. And then let's go to 150 and buy the 145. So not great, honestly. For this $5 wide spread, you're getting $183. So what this means is that if CRM is between 150 and 175, then you get to keep $185. However, if it's above 180 or below 145, then you actually lose the difference between $5, which is the width of the spreads, minus $1.83. So that'll be $2.17, right? Or $3.17, sorry. Yeah, $3.17. So $1.83 gain, $183 gain, $317 potential loss if it falls outside of your range. So iron condor, probably not the greatest strategy here, unless you're expecting CRM to really stay muted. But if it does, again, go above 180 or below 145, then you lose almost double the amount that you gain if it stays within. So we'll see. I'll look at this. We might do like a double calendar. We might do, I don't know. I'll look at it and I'll send it out in the Discord. So we'll see. Hanny, I'm here to see Z's bare arms. All right. Let's see. You think Tesla has a chance to go to 550? A chance? Yeah, but that's not a real question. Does it have a chance? Yes, of course it has a chance. So, I mean, me saying yes, how does that help you, right? Lord, what is happening? With what? The market looks like it's pretty flat, honestly. I've had a hard time with TOS when setting up trail stops where my play doesn't execute. What are your thoughts? My thoughts are train yourself, contact Thinkorswim. They have an excellent customer service team. They do free trainings. They'll walk you through what you're doing wrong. It's likely that you were doing something wrong. So I don't know what you're doing. I'm not sitting with you. Hit them up. Get trained on what it is you want to do. If you want to figure it out, you're going to figure it out. What am I doing wrong? I don't know, bro. I'm not sitting with you. I wish I was, but I'm not. So, if you ever think of visiting Morocco, holler. For sure, man. For sure. I love North Africa. Do you trade unusual call or put volume? No, I never go off of just call or put volume. Unusual call or put volume. It will lead me to then look at the chart, and then if everything else matches up on the chart, then I might enter a trade. But I won't just specifically go off of unusual call or put volume. All right, guys. I apologize, but my voice is really killing me right now, so I'm gonna hop off. For those of you that are in the Discord, I will see you guys in the Discord. We will look at some earnings trades. We will potentially look at a CRM trade if we can get one, but if we can get a good one, but we'll see. All right, guys. Thank you for joining. Until the next live stream, stay safe out there.